Hey there, and welcome to this video discussing which coins are securities. As a reminder, if you like our stuff, please don't forget to subscribe and be sure to visit our website for our free daily newsletter, our free ebook, and a free 2-hour introductory course. So last week, the world's second most popular cryptocurrency was officially declared to not be an investment vehicle, at least according to the Securities and Exchange Commission. The agency's director of the Division of Corporate Finance said that Ether, the currency that powers the Ethereum network, shouldn't be regulated in the same way as stocks and bonds. His statements follow similar ones made in April by SEC Chair Jay Clayton about Bitcoin. Taken together, the two sets of remarks provide the clearest understanding of how the regulatory agency views the cryptocurrency market. In essence, when a cryptocurrency becomes sufficiently decentralized, as the widely popular Bitcoin and Ether have, the agency no longer views it as a security. In contrast, smaller initial coin offerings, or ICOs, are almost always security in the SEC's eyes. That distinction matters because securities are subject to the same regulations as normal stocks, whereas Bitcoin and Ether will behave more like commodities, such as gold and oil. And this is important as these particular assets will require less regulation and inspire more confidence from exchanges and especially institutional investors. Up until now, the SEC has levied security allegations against a few isolated ICOs, and they have seemed more interested in prosecuting coins that are defrauding investors than ones that are misrepresenting themselves as a utility token. But I think that's about to change. I think the SEC is gearing up to crack down on many more cryptocurrencies, and we'll definitely see it affect the cryptocurrency market. So this definitely raises a very important question. Which cryptocurrencies are most likely securities? Let's find out together. Welcome to Ready Set Crypto. This is your brain on blockchain. So before we really get into the amusement park that is US securities laws, I want to make clear that I am not a financial advisor, nor am I a lawyer. All ICOs being offered to US investors should seek the advice of legal counsel. I am merely interpreting the statements of the SEC representatives and the Howey test as written, which we'll cover in a bit, to the best of my ability, and using that to speculate for my own benefit which established cryptocurrencies will be labeled as a security so I can better anticipate the future. If the SEC makes a decision in the future that differs from my opinion, they have the final say, so please do not take my word as absolute. To that end, I think this sort of uncertainty highlights the need for a well-diversified portfolio. We just gave an awesome webinar on portfolio management that I think goes hand in hand with this sort of uncertainty. You know, I feel like building a well-diversified portfolio is key to helping you protect yourself against the future. So with that, let's get into it. In July of 2017, the SEC released a report defining the DAO token as a security, establishing that the DAO token was subject to all laws and regulations of traditional securities. The report also gave guidance for other cryptocurrencies, stating that if they cannot pass the Howey test, then they will be considered securities and held to all applicable regulations as well. Many cryptocurrencies anticipated this move and planned accordingly. However, many others have not prepared for this, leaving their future uncertain. To that end, let's quickly discuss the Howey test so that we can apply this test to many of the top cryptocurrencies and determine whether they should be considered a security or not. So what is this infamous Howey test and how did it come about? Well, in 1946, the W.J. Howey Company sold its land to investors who then leased it back to the Howey Company in return for any profits they made from oranges grown on the leased property. The US Securities and Exchange Commission, or the SEC, took the W.J. Howey Company to court for not registering these leases with the SEC as securities. The Supreme Court ruled in favor of the SEC and laid out the Howey test, which has since been used to define a security. The Howey test was described by the majority opinion of the Supreme Court. The test is whether a scheme involves an investment of money in a common enterprise with profits to come solely from the efforts of others. This statement lays out 4 main criteria for an asset to be defined as a security. First, it must be an investment of money. Second, the money must be held in a common enterprise. Third, there must be an expectation of profit. And finally, fourth, the profits must come solely from the efforts of others. So to help you better understand what this exactly means, let's discuss an asset that meets all 4 of these criteria: Apple stock. First, in order to obtain Apple stock, you must invest money. Second, this money is held by Apple along with other investors' money, so this makes it a common enterprise for investors. Third, you and other investors expect a profit. And fourth, this profit comes solely from the work of Apple as a company and not from your own labor. Fulfilling all 4 of this criteria from the Howey test makes Apple stock a security that must be registered with the SEC. All right, with that covered, let's get back to talking about cryptocurrencies. Many of the organizations conducting an ICO have been desperately trying to avoid having their tokens classified as securities. This is mainly because a classification as a security automatically comes with many regulations and limitations on who can invest in these tokens and how they can be exchanged. Secondary trading and liquidity is greatly reduced for these kinds of tokens, as securities cannot be traded freely and are subject to many restrictions. This can limit or even destroy the network effects and use of these tokens to build a widely adopted platform or protocol. Additionally, they would need to be delisted from any US exchange unless the exchange is registered with the SEC, which is why people were very nervous about Ethereum being considered as a security. Before we get into going through each of the large caps, let's briefly cover the key takeaways you need to know about securities. There are 2 main legal structures for tokens: security tokens and utility tokens. Even though the Howey test is a good approximation to evaluate whether something qualifies as a security, there's still a lot of uncertainty on how the SEC will apply the test in regard to cryptocurrencies. Just because a token has a use value does not automatically prevent it from qualifying as a security token. Structuring a token as a security leads to legal clarity and protection for both the company and the ICO contributors. But as of now, they're still subject to strict regulations and limitations. And lastly, secondary trading of security tokens will be facilitated through the launch of licensed security token trading platforms. So what does this mean for cryptocurrencies? Any cryptocurrency that could be considered a security will either have to be registered with the SEC and follow their regulations, or they'll have to put in place measures so that US citizens cannot buy or trade their coin. Failure to do this could result in the seizure of the cryptocurrency's assets by the US government. In response, many cryptocurrencies closed their ICOs to US citizens. This allowed them to bypass strict filing rules and compliance with the SEC. Other ICOs utilize a special exemption for their ICO where only investors with $1 million in net worth or who earn greater than $200,000 a year can participate in the ICO. These are known as accredited investors. So in an interview, SEC Chairman Jay Clayton told CNBC that the classic definition of a security would be used to evaluate crypto assets and ICOs. Basically, if you're raising money from a centralized source for a project that people are investing in with the expectation of a return, that is an investment and thus a security. Clayton also made it clear that the SEC was not going to change the definition just because crypto represents a new technology. Ultimately, I can envision a world where we may even work with regulators to tokenize existing types of securities, marrying the existing markets with the benefits of cryptocurrency-based markets, like 24/7 trading, real-time settlement, and chain of title. So I believe this will democratize access to capital markets for companies and investors alike, lowering costs for all participants and bringing additional transparency and inclusion to the cryptocurrency ecosystem. Essentially, while things are confusing and opaque right now, The cryptocurrency space is becoming more recognized and established. And while regulation may seem scary, it's really a necessity for acknowledgement and institutional investment and mainstream acceptance. I cannot stress enough how this might seem bad in the short term, but long term, it's very good that the SEC is taking these steps and moving at the pace they are. So to that end, let's dive right into some of the biggest coins out there and try to understand why they are or are not securities. The ratings I'll use are very likely, likely, unclear, unlikely, and very unlikely. Okay, so first up, we have Bitcoin and Ethereum. And quite obviously, the answer is very unlikely, as they've already been cleared by the SEC. For Bitcoin, there's no common enterprise, and there's no third party raising profit. Whereas for Ethereum, it both holds value and provides network utility, and as such, there's no promise of profit arising from a third party, so it's not a security. Moving right along, we get to Ripple. And at this time, there's no expectation of profit, dividends or payouts expected for Ripple holders. It is used as a value holder for transactions in the Ripple ecosystem. Now, some believe that the ruling by the US Financial Crimes Enforcement Network, or FinCEN, in 2015 sets a definition for the native coin of the Ripple network, XRP, within the US federal government that cannot be superseded by the SEC. In a 2015 civil enforcement case by FinCEN, Ripple Labs was accused of violating the Bank Secrecy Act, or BSA, by acting as a money services business, or MSB, by selling XRP without registering with FinCEN. It also failed to implement and maintain an adequate anti-money laundering, or AML, program. A settlement agreement ensued, criminal charges were resolved, and Ripple was fined $450,000. Critical to the debate, the trading of XRP was permitted. Now, not everyone in the cryptocurrency community agrees that FinCEN has set the bar for XRP, but the case is definitely grounds for argument, and no one can deny the precedent is an important factor in law and regulation. What's important to note is that Ripple, the currency, exists independently of Ripple, the company. If Ripple, the company, shut down tomorrow, Ripple, the currency, or XRP, would continue to exist. Meanwhile, critics say that Ripple is a security because there's only one implementation, and the only use case for XRP is to facilitate transactions that are driven by Ripple's banking software. Furthermore, Ripple Incorporated owns a vast majority of the tokens and likes to sell them on the open market. So I think this is one of the most contentious ones out there, but based on the evidence, I can't say either way. I think it's fair to give Ripple an unclear security status. Definitely when the SEC makes a decision about Ripple, it's going to be very big for crypto either way. Next, we have Bitcoin Cash. And as this is a Bitcoin fork, Bitcoin Cash is very unlikely to be considered a security for the same reasons as Bitcoin. After that, we have EOS, and I'll admit this one took a lot of research, and I'm still going to say that I'm unclear regarding the potential status. Now, the critics of EOS say there's only one implementation, and the parent company, Block One, which is based in the States, owns 10% of the tokens. Furthermore, EOS is highly centralized. It runs on only 21 nodes that check and validate new transactions. Every 126 blocks, 21 new nodes get elected by the stakeholders, which means every round an elected node mines 6 new blocks. Blocks get produced every 0.5 seconds, which makes one round last 63 seconds. Every year, there's a maximal inflation of 5% to pay the block producers, or the nodes, which in today's prices of EOS is over $300 million. All of this money goes directly into the pockets of the block producers, the 21 nodes, and grants them even more power and stake in the network. Now, people conflate or dismiss this point by saying that Bitcoin and Ethereum are also centralized due to mining pools. But I think that's a false equivalence, as EOS was designed this way. I also don't think it's the right call to say that because EOS and Ethereum are both smart contract dApp platforms, and that because Ethereum is not a security, then EOS automatically gets a pass. I know we just blew by Bitcoin Cash because it's a derivative of Bitcoin, but platforms are vastly more complicated entities, and in truth, every cryptocurrency deserves to be scrutinized fully. People are quick to say that EOS is not a security because the ICO was not available to US citizens, and because the ERC20 tokens were, by Block One's own admission, completely worthless. But now that they've transferred to their proprietary mainnet, I don't think that gives them a free pass. They've raised billions of dollars over the course of a year, clearly with the promises of building software and for the benefit of those buying in. And while they didn't allow US citizens to participate, they still advertised in Times Square during that period, for example. People are quick to make the assumption that EOS is a security because all proof of stake coins are by default securities, but that's a fallacy. A determination that proof of stake implicates securities law would depend on a fairly aggressive and unsophisticated interpretation of both securities law and the protocol. Such a determination would not achieve any of the SEC's consumer protection objectives and would additionally stifle innovation in the industry, forcing developers to adopt primitive and wasteful consensus algorithms such as proof of work. Any ambiguities in the applicability of the Howey test to proof of stake should be resolved in the favor of innovation. The agency has stressed over and over again that it champions innovation and that blockchain technology has merit. And look, we don't want regulation to outpace understanding. So I know I brought up a lot of cons, but this is not meant as EOS FUD. There's worth here. Even if I think their mainnet launch was a dumpster fire and their year-long ICO was ridiculous. After trying to come up with a definitive position for hours, I simply don't have one at this point. I'd love to get a comment that proves definitively either way, but based on everything I've read, I doubt that I will because it's just so unclear at this point. All right, so moving along. Next we have Litecoin. And with the same setup as Bitcoin and Bitcoin Cash, Litecoin is very unlikely to be considered a security in its current state. After that, we have Stellar. So the New York financial regulators have approved Stellar Lumens to trade on the ItBit exchange, the first time the state authorities have given Stellar Lumens the green light. The CEO of ItBit commented on this addition, saying, "That's why we've added them to the exchange. If they were a security, you'd have to go through a different process." So because of this event, I think it's pretty clear that Stellar is not a security, but they still hold some tendencies of securities, some ambiguity akin to Ripple and EOS. So I'm just going to say that they're unlikely. Moving along, we have Cardano. Now, based on what I've read, it seems they're closer to Ethereum than EOS in this regard. But I'll be honest, I think Cardano is probably the most complicated project in the top 10. So understanding anything about them requires a lot of work. And again, simply because they're using their proprietary Ouroboros proof of stake algorithm does not necessitate that they're a security. And in fact, they've recently made a security breakthrough regarding that algorithm. Now, IOHK, Emergo, and the Cardano Foundation collectively hold 20% of the token distribution. And during the bootstrap era, Cardano runs all of the validating nodes themselves. That being said, the founder is adamant it's not a security. And like EOS, they took precautions with their ICO to not allow US citizens. So the future remains unclear for Cardano, but again, I think it stands a better chance of SEC examination than EOS, for example. So I'll label it as unlikely. Next we have IOTA. Now, there's no expectation of profit coming from the efforts of others, making IOTA very unlikely to be considered a security. Essentially, it's a utility token, pretty much through and through. So after that, we have Tron. Now, Tron's token will be used to facilitate data sharing in the Tron ecosystem, so it definitely has utility. Now, what has gone under the radar for most people is that Tron has functional decentralized apps already running on it, including Game.com and Gifto, both of which at some point were in the top 100. Now, Tron's public token was only a 40% public distribution, and much like EOS, they've elected to use DPoS, or Delegated Proof of Stake, which in Tron's case, on June 26th, there will be an election to choose 27 super delegates or super representatives with an annual reward pool of over 1 billion TRX, or about $47 million at today's prices, or $300 million at Tron's all-time high. I think this puts them in the same regulatory gray zone as EOS, and it's why I think it's fair to give them an unclear evaluation for their security status. Last, I want to talk about NEO. At their ICO, given the SEC guidelines, I would have said that NEO appeared to be a security, but I no longer think this is the case. All initial investment made to the Anshar's ICO has been fully refunded back to the investors. This means there's no longer an issuance of tokens in exchange for investment with the expectation of return by a central body. In a sense, I think there's little concern with NEO being labeled as a security. Further decentralization will help this process, which is why I'm only giving them unlikely status, but I believe they're safe for now. And so that was the current state of some of the largest cryptocurrencies out there and their potential status as security tokens. So did you notice a pattern? Based on my own interpretation, there is no coin on that list that clearly stands out as a security. Every coin has taken some steps to negate the Howey test, or they clearly don't fit it at all. And that's the takeaway here. The SEC is concerned about ICOs that clearly raise funds in defiance of securities laws, which deserve to have fees and taxes and regulation applicable to what's more akin to a stock than a currency. Every ICO is going to argue they're a utility token because that would mean that they're under the purview of the CFTC, which is going to be way less demanding than the SEC. But it's up to the SEC to define the difference and make the ultimate judgment. But I want to impress upon you what this video should have made very apparent. Many of the largest cryptocurrencies are ambiguous at best, which highlights how and why they've gotten to the market cap they have. They've either decentralized or are in the process of decentralization. And while there's some questionable actors like Tron and EOS, for the most part, these coins are starting to take on a life of their own and really starting to represent the decentralized currencies we want them to be. The decisions about the status of Bitcoin and Ethereum have been some of the most significant events in the history of cryptocurrency, although it may not seem like it. This is truly the first gate of many to come before we reach institutional investment, proper regulation, and mainstream acceptance. But importantly, that gate is now open to us, which legitimizes this space and this movement in ways that will become more apparent in the years to come. I hope you're ready. It's about to get really exciting. And that's it for this video. Thank you so much for watching, and please consider subscribing if you haven't done so already in order to continue to see high quality cryptocurrency analysis and advice. Don't forget to hit the bell right next to the subscribe button in order to be notified when we put out a new video. Also be sure to watch some of our other videos and visit our website, where we've got more free cryptocurrency education, a free intro course, a free book, and a free newsletter. So definitely check us out. Thanks again for watching. This has been Ready Set Crypto, and I'll catch you in the next one. Cheers.